Well, good morning, everybody. Thank you all for coming. I know we have a handful of people here, some more coming in, and a bunch of people with us online. So thank you all for joining both in person and virtually. I'm Neil Chase. I'm the CEO here at CalMatters. And for those of you who don't know, we're a nonprofit news organization covering California policy and politics. We've been around for about 8 years. And this is the first in an ongoing series of conversations like this, where we hope to bring people in and talk about the issues that are most important to California for an audience here in Sacramento and around the state. My previous job, I was the editor of the Mercury News in San Jose, and we converted our entire business desk to a housing desk to talk about housing and home ownership and homelessness because it was so important. That was 2016. It has only gotten so much more important since then in a state where so many people worry about how they're going to afford to live, to rent, to buy, to build wealth. It used to be that home ownership was the way we all built wealth. And I'm really thrilled to have a group of experts here to talk about it today and follow up on some of our coverage about it. And with that, I want to turn the microphone over to our reporter, Alejandro Lazo, who's going to lead the event. Good morning.
Good morning. Thanks so much. Good morning. Thanks so much, and thanks everybody for joining us. I'm really excited to be here. As journalists do, I'm going to start with a little bit of a preamble or an example. Earlier this year, I interviewed a woman for a story named Caitlin in Los Angeles. She and her husband were both college-educated, native Californians. They married during the pandemic, and then they began home hunting in expectation of starting a family. But they found finding a home impossible. They were outbid on several of their properties. There weren't very great options for what they could afford. And then when interest rates rose last year, monthly mortgage payments put buying a home out of their reach entirely. They gave up, and now they're worried they'll be shut out of the market pretty much for good. I think this example sort of illustrates what we're here to talk about, that California's housing market soared during the pandemic with low mortgage interest rates driving home buying. The subsequent increase in mortgage interest rates only made things more expensive, with prices not coming down. And these days, fewer than 1 in 5 Californians can afford to buy a home. So today we're going to talk about this housing crisis from the perspective of homebuyers. We'll discuss what California homebuyers are facing today. We'll get some background about the origins of the so-called affordability crisis. And then we'll talk about some potential solutions, leaving time for some questions. Obviously, this is a pretty complex, high-stakes issue with lots of nuances. So joining me on stage are folks who bring both high-level expertise and boots on the ground attention to these issues. And I'm really looking forward to their perspectives. So let me do a couple of introductions here. Let's start with Konstantin. Konstantin Hatcher is the Senior Director of Community Impact at California YIMBY. That's short for Yes in My Backyard. YIMBY has emerged as a powerful group advocating for more housing in cities and in the state capital. Thank you very much for joining us, Konstantin.
Happy to be here. Thank you.
Awesome. Next up is Adam Briones. He's the CEO of California Community Builders, a statewide advocacy group that seeks to end California's racial wealth gap and housing crisis for communities of color. Adam, thank you very much for joining us.
Thanks so much for having me.
Great. And then we have Carolina Reid, who's an expert in affordable housing at the Turner Center for Housing Innovation. That's a nonprofit research and housing policy think tank at UC Berkeley. Thanks very much for joining us, Carolina.
Great to be here, and thanks everybody for joining us today.
And of course, Ellen Martin, who's the Director of Homeownership for the California Housing Finance Agency, that's CalHFA, a state agency whose mission is to finance affordable housing and make homeownership possible for low and moderate income Californians. Thanks, Helen, for joining us.
Thanks so much. Happy to be here.
Great. So I want to start off just by sort of talking about what is affordability and what do we mean by affordability. There's a pretty simple metric that the California that the California Association of Realtors puts out that says something like 1 in 5 California households these days could afford a medium-priced or typical home at the very start of the year. So these sort of affordability metrics are pretty common. You take into account incomes, mortgage interest rates, home prices, and so on, and they come up with a figure that about 1 in 5 Californians, or only about 17% of Californians these days, can afford to buy a sort of typical home in the state. And that's really the lowest rate of affordability that we've seen since right before the very last downturn. That's right before the last crash in sort of the late aughts or so. And then if you break down these numbers a little bit further by ethnicity, you get Black and Latino families who are able to afford a medium-priced home in California the least. So there's something really going on here. I'd like to kick off the discussion by turning to Dr. Reid. I was wondering, can you just lay out in a little more detail for us, what the current California home buyer faces? Is homeownership in California really only for the rich? And let us know and tell us a little bit about kind of what happened during the pandemic.
The answer is yes. So it is pretty remarkable when you think about the incredible housing market volatility we've had since about 2000, right? Before then, we sort of saw a pretty steady but relatively sort of moderate increase in house prices. With the subprime boom, the subsequent foreclosure crisis, and then the rebound, and then absurdly, in the pandemic, when we had this major economic shock, instead of seeing houses prices go down, we saw them to continue to rise. And all of this has made homeownership increasingly difficult for people to access. And so I think for me, one of the things that has been really profound is the degree to which the share of adults who can access homeownership in California has declined significantly since 2000. So in 2000, about 1 in 2 adults lived in their owned home. Today, it's been dropped to about 43%. That's a huge decline in just 20 years, and it's 15 points lower than anywhere else in the country. Right? So despite the fact that there have been changes in household formation, in the age at which people become parents, which is often a trigger for wanting to become a home, like in your story, right? We see that Californians are much less likely to be able to access homeownership than anywhere else in the country. The other thing that is really striking is that this is most pronounced for adults aged 35 to 45, exactly those ages where we would expect people to want to access homeownership. For that group, the share that was able to access a home declined from 50% to 40%, almost 10 percentage points in just 20 years. There's lots of reasons for that. I think we're going to get into that more over the panel. Certainly, it's an explosion in house prices, and certainly it's also a rise in income inequality that is making it harder for a much larger segment of people to afford a home, and that is particularly pronounced for people of color.
Ellen, I have to think that this question sort of resonates with you, being at a state agency whose mission really is to sort of make homeownership more affordable for what you might describe as everyday Californians, right? What would your response to this question be? Is homeownership really for becoming something for the rich these days in this state?
Well, I'd have a slightly different answer, which is not if we can help it. But I think it's helpful to provide a little bit of context about sort of who CalHFA is and what we do and some of the challenges that we do face in this economy in terms of helping first-time homebuyers. So the California Housing Finance Agency, we were established in 1975 as the state's affordable housing lender. We're a self-funded agency, so we operate a little bit differently than most state agencies. We report to our own board of directors. We have our own credit rating that's separate from the state. And so all these things have implications for how we operate our programs. Fundamentally, though, our mission is to assist Californians in financing their housing needs. And so on the homeownership side, we do that through down payment assistance programs that are paired with first mortgages that help first-time homebuyers access homeownership. Our flagship program is our My Home program, which offers 3 to 3.5% down payment assistance to first-time homebuyers. And that loan is repaid. It's a loan that's repaid at 1% fixed simple interest. And then we have a couple of other boutique programs that we've operated from time to time that we can talk more about. But I think what's really important to underscore is our ability to help California homeowners and first-time homebuyers is really contingent upon the real estate market and the economy. So all of these challenges that Dr. Reid is talking about sort of come to roost with us when we are trying to help first-time homebuyers get into this extremely challenging market. So, we sort of have this trifecta of challenges in terms of persistently high housing prices, low inventory, and now we've introduced interest rate volatility that just makes it really, really challenging for any home buyers to access the market. We've sort of lost that really important churn in the real estate market that helps us to get those first-time home buyers into housing. And so I think we'll probably talk a little bit more about some of the ways in which we've calibrated our approach and offered some additional boutique programs to try to get at this issue and help provide the levels of assistance that are really necessary in today's market to get people into their first house.
Absolutely. And Konstantin, as I understand it, you work with a lot of community groups that are organizing around the issue of housing, right? And this sort of initial step in to the housing market has become so difficult with high costs, a very competitive market. You just tell us a little bit about kind of just the sort of community work you do, and what people tell you about home ownership. What are people's point of view about becoming a homeowner these days? Are they are they wrestling with this question of like, I'll never be able to buy, or tell us a little bit about what you're hearing.
Yeah, thank you. Can you hear me? So I think home ownership has always been a means of, especially when you're talking about communities of color, ways of building wealth, ways of elevating your family. Like you like to tell stories, I like to tell the story. For me and my family, home ownership meant, my working class grandparents could send all their kids to college, they can elevate, they can have, successful careers. When we're seeing in communities of color, which is the vestiges of redlining, restrictive covenants, that dream of home ownership has eroded to the point where it's not about one, it's about the ability to afford, the ability to access. And that is just being exacerbated more and more as we continue to go through this crisis, right? As we look at we work on housing policy at all, on the full continuum of housing, and home ownership is right there at the top. And so if you don't have opportunities for folks to be able to get into homes, now they're stuck in apartments that they should be in moving and living in and buying their first homes. The folks that could move into those apartments, now they can't, and on and on and on, till the folks that are falling off the cliff into homelessness. So, when we look at that lack of opportunity, that's where you're seeing these tremendous spikes in wealth inequality. You're looking at, lack of access to schools and jobs and all the things that most of us aspire to want to have for ourselves. So when you're looking at these particular communities, even organizations that aren't necessarily focused on housing, they've had to start to look at the housing issue because it cuts across so many aspects of the work that they do in their communities. And if you want to look at all the other issues that are facing these communities, you can start looking at housing as a key indicator and where folks live, what your zip code is, and and how your ability to afford that housing is affecting you. So those avenues, those kind of ladders to help raising and lifting your family out of the situation, given all the other inequalities, those are being closed off and shut down. That's why when we look at housing, and we'll get into it a little more later, but we have to look at how are we building housing opportunities, homeownership opportunities that are accessible to more Californians, right? And that may not look like the traditional single family, lot that we're used to seeing in the movies in the 50s, right? It's what other opportunities do we have out there to help folks access this dream?
Yeah, that's really interesting. I think that's fascinating that a group like California YIMBY that's, kind of, just fundamentally about housing has been able to now sort of reach out to a broad array of sort of organizations out there, because housing has become such a pervasive sort of important economic issue just across the board, and that I find that really, really interesting. I'd love to hear more about that. But Adam, love to get your response. Basically, how do you see this issue? Just about, I know this, this is something that's sort of core to your work. How do you respond to this just idea that home ownership, once a sort of middle class California dream, perhaps now just increasingly for the rich?
Yeah, it's definitely the thing that keeps me up at night. And I think from our perspective at California Community Builders, one of the most insidious things about the housing crisis, home ownership crisis, is it all seems natural, right? It seems like maybe housing and home ownership just is for the rich. But in fact, it really is due to very specific and deliberate public policy decisions that we've made over the past 100 years. For instance, when we think about redlining, that wasn't just circling communities with a red line and saying no mortgages in these areas. It was also saying that people of color couldn't buy homes in areas that were majority white. And of course, once it became formally illegal to stop non-white people from buying homes in these areas, what's the second best way to discriminate? It's based on economics. And so as a state, we made a decision a generation ago to really prioritize and privilege developing only single-family housing. And because that's the most expensive type of housing, what we basically said is that we are going to privilege and prioritize only the people that can afford the most expensive type of housing. And who did those people tend to be? They didn't tend to be black families. They didn't tend to be Latino families, poor immigrants, what have you. And so what we found ourselves in a situation up until very recently, and that's thanks to the good work of the folks over at California YIMBY and other good groups, that until recently, up to, I think, 75% of the residential land in California was set aside for only developing single-family home ownership developments. And what that meant was that only the most expensive type of housing was created. And so when we think about these issues, A, they do have a direct and an intentional connection back to redlining and other types of systemic discrimination. And B, it is important to remember these were deliberate public policy decisions that were made. This is not the natural world and how things are supposed to work. It's because of decisions that we as a state made, and to fix it, we as a state have to make specific and intentional decisions to correct those past wrongs.
Oh, thank you. Yeah, no, I mean, just building off that, I think that history is fascinating and really important. To bring it back to today, now with I'd like to ask this. We rising home prices have kind of now created a sort of natural constituency, you might say. People who are homeowners, and one might posit that. In order to kind of make housing more affordable for people, home prices have to go down. So I just would be interested in this. You responding to this idea. How can this be resolved if you have, now kind of a sort of kind of natural political constituency who are homeowners, a lot of people needing homes, how can, policies be made to address this homeownership issue? Anybody could take this one, but I'll turn to Carolina.
So I think I'd love to hear what Konstantin has to say about this too.
Great.
But, I think one thing that we have forgotten is that homeownership provides, first, we want to make sure that when we're getting people into homeownership, we're doing so sustainably. We know that predatory lending practices and getting people into homes when they can't afford the mortgage payments is bad, both for them and for overall communities, and that was certainly one of the cases of the subprime boom. We saw a proliferation of predatory products, particularly marketed in communities of color, that really devastated those communities and those households, and super excited about the work that you're doing in extending homeownership opportunities that really do provide for sustainable homeownership. But for the majority of homeowners and in majority of time period, the financial benefits and the wealth benefits of homeownership haven't come from rapid price appreciation. It's come from the forced savings mechanism, it's come from the tax benefits, it's come from the housing stability, and it has come from the fact that when you have a 30-year mortgage, your housing payments decline over time relative to your income, as opposed to renters, right, who are often facing inflationary rental prices. And so I think from a household's perspective, we need to decouple this idea of housing stability, wealth building that is associated with homeownership with this idea that I deserve to have 10% year-over-year price appreciation.
Yeah, and Konstantin, I'd love to hear your thoughts on this one too. Just tell me a little bit about the work you do to sort of kind of get over this sort of natural consistency that exists perhaps out there. Obviously, there is the name of your group is Yes in My Backyard. That's a play off the No in My Backyard. Tell us a little bit about the NIMBY issue.
Yeah, no, I mean, look, people generally start with their self-interest, and then their values and morals and the way they've been taught kind of start to weigh in. I think, yes, there are there are NIMBYs. We know them well. You can listen to them call in and sometimes saying the things that you shouldn't say out loud. But I think at the end of the day, there are more, and the studies show this, there are many more Californians, 2/3 of Californians want inclusive neighborhoods, want opportunities for all of Californians, want to have vibrant communities where they can live, work, raise a family. And so, and are welcoming of new neighbors, and understand that as a state, we have to be, we're facing the consequences of not having enough homes for folks and not having enough. So whether it's renters or homeowners, we don't have enough housing for all Californians. And that's why we've lost a congressional district because of that, right? We're seeing people say, I want, and it's not about like even just affordable housing, it's workforce housing. Our workers, our nurses, our teachers, our firefighters can't even afford to live in the communities that they serve. So most Californians see the issue and want to change it. And it's up to policymakers and state legislators and to really create the opportunity for whether it's help or whether it's sometimes a little bit of extra nudging for our local municipalities to make an environment where it's easier to build. So what we focus on is, how can we build faster, less expensive, and which will help bring these costs down, right? Whether it's affordable, big A affordable, deed-restricted affordable housing, homeownership, along the entire spectrum. So it's really important for us to really come up with state policy, and we've been lucky with partners like Adam over at CCB and others across the state to really say, okay, how can we create an environment where the folks that are building can build as much as we possibly can responsibly, not would try to reduce any unforeseen harm, but really create an environment where we can build the homes that Californians need. And that's going to, there's no way that, other way to get out of this thing except we have to build more, and we have to build more opportunities for home ownership if we're looking at seriously attacking, creating opportunities for wealth growth and closing the income inequality gap.
Right. I guess from my perspective, I'm just thinking like, okay, if you're a homeowner in San Francisco who's recently bought, let's just say use San Francisco because it's a high cost market, good example there. And, I've paid $1.3 million or $1.5 million or whatever it is for a single family home. And then you have some state policy or local policy telling me, well, this city needs a lot more housing and we need prices to come down. You're going to say, well, this is my asset. I don't want to see it depreciate by 20, 30% or whatever number is needed for housing to be more broadly affordable for people. I have to think, Adam, that this is a sort of, constituency, and an issue that you have to grapple with on a daily basis. Can you talk to us a little bit about the balance between kind of pushing for more affordability in the homeownership market and, NIMBYs?
Yeah, absolutely. And I think I really, resonated what Carolina said, which was that I think the vast majority of homeowners, and I think as a society what we want for homeownership, is not to hit the lottery. It's to create a stable asset for folks to live in, to grow in, and then pass on to their family. And I think that most Californians, if given the choice between maximizing to the utmost extent their economic benefit versus having broad prosperity for their families, their friends, and their communities, I think they would choose the latter. And I think that when we talk about broader affordability in the homeownership market, what we're not talking about is if you bought $1 million home, it's going to be worth $800,000 tomorrow. What we're talking about is perhaps in 10 years, it'll be worth $110,000 versus $1,080,000. And so that's the type of thing that I think we're talking about, and it's really about appreciation and not so much the base value that you bought it for.
Okay, great. I mean, I'll bring up a certain point that was really interesting during the pandemic. We saw home prices go up something like 47% from the start of the pandemic, from March 20 to about May 2000. From March 2020 to May 2022, California home prices went up 47%, hitting $900,000 as a median home price. That's a statistic I caught from one of Cal HFA's meetings. So Ellen, given that that's a stat I heard from listening in on one of your meetings, kind of just tell us what that kind of home price appreciation means for California's market and for buyers, during that time, and for now and for current day where prices haven't really declined that much.
Yeah, it's an enormous challenge. It's the biggest challenge we face. One thing I say, which is a little bit fatalist of me, but our down payment assistance programs and our ability to help homeowners are really only as good as the inventory that's out there. So when we see rapid price appreciation like we did during the pandemic, it's really just shutting more and more first-time home buyers out of the market. And then when you couple that with the fact that many folks who were purchasing homes in that time period were doing so at historic interest rate lows, those folks are not moving out of that home that they purchased in that run-up. So it's an extraordinary challenge. Some of the ways that we can mitigate that challenge are through programs like our recently launched Dream for All program, which offered much more generous down payment assistance in the form of a shared appreciation loan that is intended to keep pace. So the repayments on that loan, by virtue of the fact that it's shared appreciation, are intended to keep pace with the appreciation in home prices in California, so that when you get repaid, when that loan is repaid, it's enough to help the next home buyer. But it's an extraordinary challenge, and I also think that it really comes down to thinking about the types, as I think Konstantin and Adam were talking about, thinking about the types of housing that we're constructing, focusing on that missing middle, building the types of housing that are accessible to the first-time home buyer, is really, I think, key to unlocking home ownership for all Californians.
Absolutely. Please go ahead, Konstantin.
No, I was just that point that she made about that you're only as good as the inventory. I mean, if you look at, remember during the pandemic, everyone made a run on toilet paper, and you had to go online and you had to pay like extraordinary price for toilet paper because you couldn't find any on the shelves. Well, homes are the same thing, right? If we don't have the inventory out there available, then now it's going to skyrocket, and that's what's happened in California. And so thinking about those opportunities to build, different types of home ownership products, one of the things that we were working on, like a SB9 a couple years ago, where you could have lot splits, you can sell off some of those and for potential home ownership opportunities, right? It's naturally more occurring affordable housing. You look at a bill like SB 684 that's going through the legislature now that looks at the map subdivision and how do we can, building, up to 10 homes on vacant lots or in lots within multifamily zones so that you have, these homes that are, in your affluent neighborhoods can be, 40% cheaper in your lower working class neighborhoods, 80% less expensive. So these are ways to increase that stock of affordable, accessible homes for our families, for our working families, and that's very important. And on top of that, just looking at the kind of the California, what people, even those folks that are in these great homes that are like appreciated crazily, they're just facing the issue that their kids, their grandkids can no longer live in their communities that they want them close. I don't know if you've ever had a kid or a grandkids. You want your kids as close to you as possible. And that dream and that reality is becoming further and further unreachable for folks. So folks are, we like this appreciation, but you know what I like more than my house value? I like my kids to live close to me. I like to be able to see my grandbabies every Sunday, And so I think that's where we're at as a state, and that's why so many folks have been it's so supportive of some of the work we've done in California and being with partners like Adam.
Absolutely. And, so it sounds like we've kind of defined this problem pretty well. Would you say, a lack of affordability, a lack of supply, mortgage interest rates serving as these days now seemingly a barrier to affordability where you would thought prices would have come down. Would love to sort of talk a bit about some of the solutions that we've been considering, we've been talking about, we've been thinking about. One of the more recent ones was one that Ellen, mentioned, which was, the Dream for All program, which I, had the privilege of writing about for CalMatters earlier this year and sometime last year. It was a program that was created in last year's budget. There's about $300 million allotted to it. Allowed for, and I'm going to just turn it over to Ellen to explain this program for us. But basically, the state provided some major down payment assistance to California home buyers, and with the idea being that the state would share to some degree in home price appreciation. But Ellen, please lay out the program a little bit in more detail for us.
Right, happy to. So, as Alejandro mentioned, this was essentially a special initiative on the part of the California legislature. It was championed in particular by Senator Tony Atkins. And there was really some foundational and seminal work done that was led by the State Treasurer's Office and a consulting team headed by California Forward. And so I just want to recognize that Adam was part of that consulting team that did some really great work that really established the considerations that you have to think about when you're putting a shared appreciation loan program into place that really provided CalHFA as the implementing agency for this program. It really provided us with a great foundation to start with. So I just want to recognize and thank them for their efforts on that. It was, so to summarize, and I'll try to keep it short, the California Dream for All program is a shared appreciation loan program that offers up to 20% down payment assistance for first-time home buyers that are low or moderate income. So when the home buyer then goes to sell or otherwise transfer their home, they have to repay the original down payment assistance loan plus a pro rata share of the appreciation in their home. So if a homeowner took out a shared appreciation loan amounting to 20% of the home purchase price, when they repay that loan, they would repay that original 20% plus 20% of the appreciation in the home's value. And so like I mentioned earlier, the intent is really that that repayment stream is then more recyclable in terms of keeping up with home price appreciation over time. So when that homeowner goes to sell, almost by definition, their repayment is sufficient to help the next homeowner at the same level. And the other kind of pillar, the other foundational pillar of the program was, as we've discussed, this notion of providing more generous down payment assistance that can help home buyers who are extraordinarily challenged in today's market access first-time home ownership. So, and that goes double for folks living in high-cost areas, places like the Bay Area, LA, San Diego, Orange County. You know, we want to be able to provide assistance to those teachers, to those nurses, to those social workers who want to be able to purchase a home near where they work. And so one of the primary goals of the program was to increase access to home ownership in high-cost areas, and particularly for underrepresented communities who have historically been locked out of the housing and capital markets. So by providing this more generous down payment assistance, up to 20%, you're able to not only help folks be more competitive, but you're also able to help reduce or even eliminate private mortgage insurance, which helps to increase the buying power of that potential home buyer. So they can afford to pay more in monthly housing costs because they have a 20% down payment assistance that allows them to eliminate that monthly cost. So that's Dream for All in a nutshell. Happy to answer any more questions.
No, great. No, I mean, as mentioned, Adam, you advocated for this program to come into existence. You worked on it. I think the idea being, I think both the state senate wanted and advocates wanted to see a lot more money going into this program, but we're now in sort of a budget deficit environment. But we did have an initial trial run. The program was extremely popular. Very high percentage of folks in the Sacramento area, using the loan program. I mean, just tell me from your perspective, how's it going? Were the initial sort of was the initial outcome kind of what you expected? Is this what you wanted to see out of this program?
Yeah, so I think first and foremost, I think we really need to give a hats off to CalHFA, because so often, and this is something we heard sort of talking up and down the state to housing counseling groups, is that they have difficulty actually using down payment assistance dollars that are out there. So often government programs place so many restrictions that it's actually quite hard to put the money to work that's set aside to create more home ownership. And so this was a real government program that we saw works. We got the money out. CalHFA got the money out. They're new first-time home buyers, and I think they deserve a real hats off for that. I think that obviously as a first-time program that's actually only about 30% of the dollars that we thought would be set aside for it being put out there, I think there's room for growth. I think that certainly there's probably some room for growth around targeting geographic regions. Certainly the hope is that we could reach more African-American borrowers. But one thing I do also think is worth acknowledging is that we're asking CalHFA and other state agencies to basically sprint with weights on their legs. Right? Because as a state, we say two things that are sort of opposed. On the one hand, we want, race equity, we want fair programs, we want to right the wrongs of the past, but we still have Prop 209 on the books. So we ask public agencies to target communities, but don't really target communities because it's illegal. And so to the extent that we are a state that really wants to effectively target and right the wrongs of systemic discrimination that we've seen for the past 100 years, we really need to grapple with the fact that we can do a better job at eliminating some of the laws on the books that really stop that and make the process much, much less efficient than it could be.
Right, and I think the subtext here is that the program was very popular. The money was used in a very short time period, less than 2 weeks, I believe it was. 11 days. But the hope of it, reaching more, African American families, Black families, wider portion of the state, I think that wasn't quite met. And I was just wondering, what do you think of those points and what Adam is saying, Ellen?
Yeah, so what we saw in the initial numbers for Dream for All, and I just want to caution everybody, these are initial funding commitments. We'll have more data as the loans go through our multi-level review process and are actually finalized and the funds dispersed. But we definitely saw some areas of improvement, as you mentioned. But we did see very strong performance in the program within the Latino community. About 34% of the funds went to Latino households, and that compares to about 30% of California households that are headed by a Latino head of household. So we did see the program outperform in the Latino community. We saw similar outcomes in the Asian American and Pacific Islander community. In terms of the Black community, we did see the performance dip slightly below the composition of California households in California, so I think you're absolutely right that is a key area of improvement for future iterations of the program. And then in terms of geography, we did see a lot, so all of our programs generally are driven by housing affordability and where our first-time homebuyers can afford to buy a home. So we consistently see our down payment assistance being concentrated in the Central Valley, the Inland Empire, and other areas where housing is more affordable, particularly to the CalHFA buyer. In this case, we did see some substantial shifts where, the Capital Region, the Inland Empire, the Central Valley, we saw some shifts over to other high-cost areas. And so we think that that's extremely promising, particularly the Bay Area. For the first time ever, we saw the share of our down payment assistance in the Bay Area almost match the Bay Area's composition of households. So I think we were 1 or 2 percentage points below the Bay Area's composition of households. We saw some significant gains in other areas of the state, in LA, in San Diego, in Orange County, in the Central Coast. We still didn't match those regions' composition of California households, but we saw some significant upticks in terms of how much of our down payment assistance was able to help in those areas. So I think that's extremely promising, and we were gratified to see that because, like I mentioned a little earlier, one of the primary things we want to be able to do is make home ownership accessible to first-time homebuyers throughout the state, and in particular in those high-cost areas. If we want to address our challenges of livability and sustainability, then folks have to be able to buy a home near where they work. So I think while I certainly agree there are areas of improvement in terms of reaching those critical underserved communities, I think the geographic spread and some of the movement that we did see in terms of where the program is able to assist first-time homebuyers are extremely promising.
And one of the reasons we're talking about this program is just because it's so sort of unique, right? And sort of the fact that the state government would be providing you such a big portion of a down payment for a California home, let's just say, if a California home is $1 million, the state government would conceivably pony up $200,000. That's a lot, and then enter into this contract with you as a home buyer to at some point share the gains or the value in that home. It's a real sort of contract with the home buyer in this notion that California home prices will continue to go up for the foreseeable future. And that's just such an interesting idea. I think that's why we're talking about this program in particular. But I'd like to sort of just step back and zoom out and talk about a couple of other ideas. And I'd like to turn to Carolina, Dr. Reid. I'm just interested in your take on, not only the Dream for All program that we've sort of seen unfolding here in California, but also, just addressing the question, can state government fill that sort of gap, in terms of, down payment programs or home buyer assistance? What role, in your opinion, should the state government play?
Yeah, thank you. And I would say, first, the research evidence for shared equity programs is really, really strong, right? It is a very sustainable form of homeownership for families. We find that in other shared equity programs, families that do buy a home and then sell it are able to leverage the wealth gains that they have earned through that program into another home purchase. And so it really does give them that sort of step up the homeownership ladder. And so I'm thrilled, I think, right, the fact that the state is thinking about it, because it also means that public subsidy goes further, which is a really a valuable intervention. So I'm really excited about it, and I hope that there's a lot more funding coming your way. I think we need to do a lot more than that, particularly if we want to redress racial inequalities in access to homeownership. And there's so many steps along the way where we see Black households, Hispanic households, Asian Pacific Islander households disadvantaged in housing and mortgage markets. Everything from how real estate practices happen and what kinds of homes are shown in what kinds of neighborhoods, to the exclusionary zoning practices that Adam was talking about, to interest rates and denial and access to credit. So we're talking about rising interest rates right now. Even without those rising interest rates, Black and Hispanic households pay significantly more for mortgage credit than non-Hispanic white households, even after you control for all underwriting factors. So over time, they're building less equity because of that. Denial rates in mortgage access still remain higher. And then we've recently learned a lot about appraisals, right? And that home appraisals are really different in different kinds of communities. So in all of those different spaces, there is room for government to mediate the discriminatory practices and the things that they have done in the past. So I think certainly zoning reform, SB 9, other opportunities to build more lower cost housing and homeownership opportunities are critical. Enforcing fair housing, right? Enforcing fair lending practices and making sure that those kinds of practices don't continually disadvantage communities. That's also a really important role of government.
Great. Thank you very much for that perspective. I'm just going to look over to Neil and ask, how are we doing on time? Are we going to look towards audience questions, or should we? Okay, great. Let's see if we have I certainly have plenty more questions, and we can continue, this discussion as we see fit. But let's turn it over to the audience. I think there should be microphones going around. There we go.
Good morning. Josh Newman. I work around the corner with a bunch of nice people that are trying to solve these problems called state legislators. Question about two things, RHNA and redevelopment. So, we work very hard around RHNA, and there's that question of, is it working? But more importantly, is it working at the scale necessary to change the supply and demand curves in California? With that in mind, how do you folks see the absence since 2011 of redevelopment as a tool in creating housing?
Great. And who wants to take that? And whoever does, let's define RHNA for the audience. Oh, it's okay. Caroline, do you want to take a shot? Or Konstantin?
Not a RHNA expert, but I can. RHNA, Regional Housing Needs Assessment, and essentially it forces all local municipalities regionally to plan for the housing that's needed in their localities, right? And it's kind of, cities make their plans, and then it rolls up to the counties and to like the regional COGs. And I think RHNA is good. It's a great step, like many of these other steps that as we gradually, chip around this problem at the edges. It's good, but it could be a lot better. And without trying to go into the RENA, the process is a little complicated, but there's been, I think, forcing cities to start to plan for the zoning, plan for the housing that they need is important, right? It's an important step. But I think, we're starting to see more and more with HCD really putting more teeth to RENA, and we've seen some of these laws, which have certain triggering effects, and then other bills being tied to that, like 423, like SB 35, and with 423 extending that, being tied to, if you don't hit your RENA, it triggers other, streamlining and abilities for folks to build more housing. So yeah, it's a good thing. But it's like so many other policy that it's great, but we need so much more. So it could be stronger, in terms of it could really force cities to not just plan for it, but to actually build it, right? And so I think it could be stronger, but like so many other things, and it could it needs improvement.
Yeah, it's such a great question because so much of our discussion has been revolved around, the home buyer and, what the state's role is in helping the home buyer access what exists. But, how can we create more housing? Is anybody else interested in offering an assessment of the sort of RENA, policy goals or crackdown, perhaps, as we've seen in recent years?
Just quickly,
it,
that
Adam.
was on the
Yeah.
redevelopment point. Similarly, not an expert in sort of California's historic redevelopment structure, but I will say I started my career and spent the past decade in affordable housing development and finance, mostly in New York. And one of the big differences over there is that there is just much more of an abundance of subordinate, below-market financing for things like affordable rental housing. And we could also think about what is available for sale affordable housing. And right now, there's no real large-scale pot of money to construct income-restricted for-sale housing. And so we need more money for rental. Absolutely, we need to make sure everybody has a place to live and an affordable place to live. But we also need to think about how do we construct more affordable home ownership opportunities so that when we do subsidize the buyer, it's for the lowest cost house possible that's still high quality and safe. And so while I don't know that I have a particular perspective on bringing redevelopment back versus not, I do know that there's a real dearth of funding for the construction of affordable for sale, and that is something that the state of California, I think, should also really be thinking about.
Other questions? We're going to just wait for the mic to get to you, sir. There you are. Thanks very much.
Hi, I'm Marty Behrens. And really impressive efforts to take the existing system at its highest level and intervene. So for instance, the work on that kind of loan. And I think those are really fantastic developments. One thing I'm curious about is on a regional level, or in county or on city levels, are there any outliers? Are there pioneers who locally are breaking through, in a sense, from the bottom up and identifying different ways of creating, let's say, protected markets which solve regional problems, and maybe even in partnership at that higher level? Because, my own view is that the pricing issue, we can talk about YIMBY and we can talk about those sorts of things, but fundamentally, the existing market is driven by the intensification of housing prices, housing assets, which of course benefits a very small group of financiers and wealthy investors, right? So the price inflation isn't driven by a, quote, broad market. The price inflation isn't it really driven by the benefit to the finance sector? And so you have to find local finance alternatives is where I'm going, because you can't expect the existing system to ever really cooperate because it's trying to maximize its benefit to capital, which is what capitalism does. That's great. I'm not arguing with that. But can you really fix the system unless you find some alternatives?
So is any particular jurisdiction doing a particularly great job in the sort of housing finance area? And I'm gonna pose it to Carolina. Take a shot at that one.
Yeah, so that's a tricky one. I would say that local jurisdictions aren't necessarily, that housing finance isn't necessarily in the same way in their domain. And so you're right. I think that the overall pressures of capital do sort of bring those pressures to the market. I think there's lots of interesting innovation happening at the local scale in all sorts of dimensions of this work. So I think if I think about cities that are actually taking meaningful steps to increase supply around lower cost housing for homeownership and for rental, I think of Sacramento. I think of San Diego. San Diego's ADU bonus program is actually sort of generating quite a lot of smaller, lower cost homes for people. So I think there's those kinds of pockets innovation. I also think that there's some really interesting models emerging around community land trusts in places like Oakland, where they are thinking about how do you take land off of that speculative market and preserve long-term affordability, and also provide self-determination for communities that have been both impacted by the foreclosure crisis and displacement pressures. So I think there's interesting models like that. And then I do think that there are efforts to build a more diverse set of stock from affordable housing developers to doing affordable housing preservation. And I think something that, I can't remember now if it was Konstantin or Adam, what they said is that the homeownership market and the rental market are intricately linked, right? If people can't afford their rent, they're also not going to be able to build savings to buy a home. If people can't enter homeownership, we're going to see, and we do see this, higher income people staying renters for much longer and putting pressures on that rental market. So I think some of the innovations in the rental market space are also sort of worth highlighting in terms of part of the solution, if not everything.
Fascinating. Okay, do we have time for one more question, or is that essentially it for us? Great. Well, thanks very much for joining us, today here in person and online. And Neil will give us some closing remarks. But it's been a real pleasure, and thanks to all our panelists today.
Yeah, thanks so much to all of you. Appreciate you all coming out early this morning, and to the several hundred people online and the folks here in the studio, thank you for joining us this morning. It's been a fascinating conversation. Not our last conversation about housing and home ownership, for sure, right? The start of a long-term conversation. We are, as I mentioned, a nonprofit, nonpartisan news organization. We rely on your support. If you don't get our daily newsletter, What Matters, I encourage you to go to calmatters.org/subscribe and sign up for it. It's free. And if you're interested, we'd love to have you as a member. You can donate to us. It's tax deductible. And that's what allows us to do this kind of work and bring you these things, which we're going to do on a much more frequent basis. So I very much appreciate everybody coming out. Thanks again to our panelists for the extra effort this morning. Have another CalMatters logo donut on your way out if you're here in person. Sorry to the virtual audience, we can't send those to you. And we'll see you all for the next event. Thanks so much.